Consumption in India is booming, and today I'm very happy to host Mr. Amar, this fund manager of Nippon India Consumption Fund. He brings with him 13 years of investment experience and research experience in various sectors like consumer durables, consumer discretionary, retail, and construction material. He's got over 13 years of experience, and before joining Nippon, he was a part of HDFC AMC. He's an MBA from Columbia and London Business School, and along with that, he's got his CFA and CS degree plus a BCom from Pune University. Happy to have you, Amar, on the show. Thank you, Amar, for joining me. I'll start straight with the first question. India's inflation is lower than the Americas. How does this impact the consumption economy at a macro level?
On reported basis, if you see USA inflation, CPI is roughly at about 7%. Core CPI also is about 5% there, and Indian CPI is also roughly about 5%. The thing is, grocery and fuel are very large part of expenses for average Indians, both financially as well as psychologically. Anecdotally, grocery inflation right now is reasonably high. Inflation in reality probably is not that low. See, the issue in India is the K-shaped recovery that we are witnessing. A section of the society are doing well in terms of savings, wealth effect, income, etc. Whereas the other section is some sections of the society are not. And inflation could lead to some pressure on the volumes of mass consumption items. On the other hand, if you look at discretionary products, aspirational products, experiential products, they should hold on really well for couple of reasons. One is the post-COVID sort of opening up of the economy, the pressure on relatively well-off people, wealth effect, etc., etc. All these categories are relatively under-penetrated, and these businesses should do well 5 to 10 years. Now, coming back to specifically FMCG products, which is where I said that there could be some volume pressure. There are a couple of silver linings. First is that across these categories, the unorganized sector has got badly hurt in all this phase. Right. So these larger brands have an ability to gain market share from these relatively weaker players. And secondly, all these larger players have also been doing cost cutting fairly significantly in all this COVID phase, some of which should sustain longer for them. So those are two silver linings. See, over very longer periods of time, inflation or moderately high inflation, moderate or moderately high inflation is good for consumer brands. What happens is they raise prices less than their competitors during inflationary pressure. They generally gain market share in inflationary times. And once that inflation ebbs or sort of, input prices come down, they hold on to their prices, and therefore they typically benefit a lot on the profitability side. Over longer term, inflation is good for consumer companies.
So what I understand is the lower income group being or smaller companies not being able to be very effective during COVID period, and also lower income group may be getting affected because of COVID. You don't see a huge growth in the FMCG or the staple space.
FMCG volume growth will moderate a little bit.
Going forward, the momentum on the consumption stocks, with a lot of COVID cases already dropping, and India achieving about 50%, close to about 50% of the people being completely vaccinated. What's your view going forward on the consumption itself? Do you think it will bounce back? It will be stable, not just for staple, but the entire consumption as a space itself?
I think with vaccination having progressed significantly well over the last few months, I think we are reasonably optimistic about businesses or consumption plays that are sort of aspirational or experiential, what are nowadays being called as opening up beneficiaries. This includes categories such as QSR, lifestyle fashion, hospitality or hotels. We are also positive about some of these digital plays, and there are two things that are happening there. One is, of course, they're gaining share from offline channels, and second is new habit formation. Third thing that we like at this stage is housing related plays. So people have realized the importance of houses, of bigger space for yourself, of better space or conveniences at home in this phase. So, categories such as tiles, electrical goods, fans, etc., which are a play on more houses, better houses, bigger houses. These are also some of the areas that we are positive about at this stage.
So you did talk about FMCG, and there's a specific question around FMCG. In the last 10 years, if you actually see, the EPS has been more or less volatile, if I may say so. And the average PE in general has been about 40x, and right now it is about 52x, of course, without ITC.
So what do you think about the valuation? And you just mentioned that the volume growth may not really happen in a big way. So what do you see as a return, especially from this FMCG space? This is an important question for us because a lot of investments have gone into companies like HUL and ITC and Nestle and things like that.
Valuations have indeed increased significantly over the last 10 years as a result of various factors: fall in interest rates, continuation of and continuation of those low interest rate, margin expansion that happened in many of these players in the last 5 years, and
Okay.
third is of course challenges in some other sectors. Mind you, sir, the valuations have also increased significantly in some other sectors such as IT, chemicals, etc. At this stage, I think one has to be selective in FMCG space. And my approach to FMCG space at this stage is to be very selective, and have two specific sort of sub strategies to it. One is, some sub segments may continue doing well. They could be discretionary products, aspirational products, some specific sub segments. And second is trying to play the relative valuation gaps between players within FMCG space. That might work in the sense, based on my experience, based on what I think are the strengths and weaknesses of different companies. I have a certain pecking order of multiples that
Okay.
in my mind. In some, quite often you see multiples deviating significantly from that pecking order. I would like to play such opportunities where multiples. I expect multiples to sort of
Normalize.
converge with what I think should be the rightful level. So uh, we have to have relatively modest expectations from FMCG space going forward. The opportunity is higher in non-FMCG space, which is where discretionary, this opening up, experiential products come in play. But FMCG will be always remain a decent part of the portfolio because it provides significant stability, and these businesses still will continue growing at high single digit to low double digit growth rates over medium term.
And can it also be a good defensive considering the valuations of the market?
Yes, yes, I do. That is why one may be more positive about other non-FMCG part of consumer.
Right.
You can't put everything into that bucket.
And one question which one of my investors always wanted to ask you was about ITC, right? In spite of contributing significant amount of profits to the FMCG pool, it has been valued much lower by the market. I don't know the PE, but I'm just saying it is. I mean, yesterday they had a annual general meeting or something like that also. So, what is your view about this particular stock, if you may?
So it will be difficult to speak about a particular stock, but I'll still try to help as much as I can. See, tobacco stocks have suffered from two issues. One is relatively weaker growth profile, or rather lack of it, and
Mhm.
secondly, some overhang of this ESG issue. In my opinion, the first part is more important. That is, growth visibility has been lower on these businesses, and that is why a lot of investors, or at least a lot of FI investors, have stayed away from this business.
Okay.
But and on the core tobacco business, look, growth outlook is definitely weaker than many other consumer ideas, because in general consumers are now, fewer consumers are taking up smoking
Mhm.
than in the past. But there are 2 points I would like to make about this business. One is, this is a reasonably income elastic category. This has been borne out even in WHO data that they have released at global level. This is a reasonably income elastic category and also price elastic category. What it means is, if we have a period of reasonable income growth for consumers and price stability for cigarettes, that price stability generally will come from stability in taxation. If those two things are there, I think tobacco businesses can surprise investors, and to write it off would be a mistake in my opinion at this stage.
I mean, you did mention about experimental and people getting into segments that they have never invested in. So, any particular consumption space stocks or segment that you really like for the next 2 3 years, which where you want to really go overboard than what you've already done?
Within the consumption space, the areas that I really like is, one is QSR, your quick service restaurants, which is your global QSR brands, be it McDonald's, Domino's, etc. They're Indian franchisees or subsidiaries. So that's one. The other space that I really like is lifestyle retail. That includes apparel, footwear retailers. Uh, if you see last year, the first year of COVID was the time people spend and invested really well in their houses or on durables. But I think this year and the next year we should have a fair bit of demand rebound for this lifestyle category. So that's the space that I really like. Third is this digital plays, be it food aggregators and some other digital companies, many of whom actually got listed or are in the process of getting listed right now. Uh, Third is housing related plays. Real estate as a space seems to be on a revival after a long cycle of sideways movement or sort of deceleration. So this is a space that I'm positive. And lastly, I also like health and insurance, or let's say care, preventive care and insurance as space where I think consumer engagement and consumer wallet share will increase. So those are some of the areas where I'm quite optimistic on a 2 to 3 year outlook.
One last question. You did mention real estate, and that is where it was. So, home improvement has gone big in in whole of America. So, do you see similar? I mean, not just building homes, but also home improvement happening, and that also leading to good top line and revenue growth in those companies.
I do. So if you see last 4 5 years, last 5 6 years, construction activity has been relatively moderate. Now categories which are more linked to new housing and not so much uh, linked to, let's say, renovate. Okay, let's put it this way. Paints as a category, for example, has a fairly large proportion of their business comingly from repainting. So
Okay.
they will be a beneficiary of real estate revival, but not as much as something like tiles, sanitary ware, electrical goods, which for whom the main demand comes from new housing. So I'm reasonably optimistic about these businesses. They should have better performance over next 3 to 5 years as compared to last 3 to 5 years.
Thank you, Amar. These are my set of questions. I'm looking forward to more such interaction with you.
Quite enjoyed interacting with you, Anand. Thank you very much.